Federal judge has sided with the AI company Anthropic in its practice of training a chatbot on copyrighted books without permission from the authors. In a decision with the potential to set legal precedent, District Court Judge William Assop ruled on Monday that Anthropic's training of its artificial intelligence creation Claude with millions of pirated books was allowed under a fair use doctrine in a law called the Copyright Act. Use of the books at issue to train Claude and its precursors was exceedingly transformative and was a fair use, Alsop wrote in his decision. Tremendous amounts of data are needed to train large language models powering generative AI. Musicians, book authors, visual artists, and news publications have sued AI companies that use their data without permission or payment. Alsop's decision in favor of Anthropic is a first in the United States and could be cited in other cases as a legal precedent by AI firms defending themselves in court. AI companies generally defend their practices by claiming fair use, arguing that training AI on large data sets fundamentally changes the original content and is necessary for innovation. Though most of these lawsuits are still in early stages, their outcomes could have a profound effect on the shape of the AI industry. Along with downloading for free millions of books from websites offering pirated works, Anthropic bought copyrighted books, scanned the pages and stored them in digital format, according to court documents. Anthropic's aim was to amass a library of all the books in the world, training AI models on content as deemed fit, the judge said in his ruling. Anthropic had no entitlement to use pirated copies for its central library, Alsop ruled, ordering a trial on that portion of the copyright lawsuit filed by authors to determine damages. Anthropic, valued at $61.5 billion and heavily backed by Amazon, was founded in 2021 by former executives from OpenAI, the creator of ChatGPT. The company, known for its Claude chatbot and AI models, bills itself as focused on AI safety and responsible development. Anthropic did not immediately reply to a request for comment. The U.S. federal court ruling in favor of Anthropic's use of copyrighted books to train AI under the fair use doctrine carries profound global economic implications, even for countries like Iraq and its national currency, the Iraqi Dinar, IQD. While the decision appears legally and technologically US-focused, the indirect ripple effects can shape Iraq's macroeconomic stability, investment climate, currency dynamics, and digital sovereignty. Below is a detailed breakdown of how this ruling connects to the Iraqi dinar through economic, legal, and strategic lenses. 1. Capital reallocation. Stronger dollar IQD devaluation pressure. What happened? The US court legitimized AI training on copyrighted content, potentially protecting major AI firms, Anthropic, OpenAI, etc., from massive legal risk. Effect: investors now feel more confident investing in US AI firms, which increases capital inflows into the US tech sector. Result: higher demand for US dollars, USD, especially as global investors shift focus toward AI equity and innovation. IQD impact: Iraq's dinar is pegged, de facto, to the USD via oil revenue. A stronger dollar weakens the IQD in real terms, making imports more expensive for Iraq and putting inflationary pressure on its economy. 2. Widening the global digital divide. What happened? US AI companies can now legally use vast copyrighted datasets. This fuels rapid AI advancement in countries with strong legal and tech infrastructure. Iraq's challenge: Iraq lacks modern copyright, IP enforcement, AI training infrastructure, e.g., data centers, legal data access, talent and funding for AI innovation. Result: Iraq falls further behind in digital transformation. IQD impact: countries that don't modernize miss out on productivity gains from AI, slowing GDP growth. For Iraq, this means lower economic diversification, continued reliance on oil, limited support for the IQD's long-term strength. 3. Legal precedent and investor risk perception. What happened? The US legal system showed it's willing to adapt intellectual property law to emerging technologies. Investor takeaway: US is safer for AI-related investment. Iraq, with outdated or unclear regulations, is riskier. Result: fewer tech sector investments in Iraq, especially from foreign investors or diaspora capital. IQD impact: without a diversified base of foreign investment, the dinar remains tied to oil prices, exposing it to shocks and volatility. 4. Iraq's missed AI productivity gains. What happened? Anthropic and similar firms will now scale faster, training AI on large data sets, improving models like Claude or ChatGPT. Global trend: AI will transform banking, fraud detection, credit scoring. healthcare, diagnostics, drug discovery, government, service delivery, anti-corruption tools. Iraq's position: without data access or AI regulation, Iraq becomes dependent on foreign AI providers.